Hello, everybody. This is Noah and John, and we are from UrbanDigs, and it is Monday. So you're going to get your Brooklyn weekly market report. John, let's get right to it. I'm looking at the Brooklyn chart room on UrbanDigs. I'm looking at supply came in at 3240. Looks like that dropped just a tad. Show me that chart.
Noah, you're right. Just a tad is exactly how I describe it. That's not even a 0.5%. It's 0.2%. Down 8 units from the week before. So continuing the trend of sort of sideways to down here.
Yeah, and with what the weeklies will show, we'll get there in a minute. We have that same net deficit issue going on in Brooklyn right now. We'll get to that in just 1 second. But instead, let's move right on to Brooklyn pending sales. Came in at 3,562. That looks down just a touch also, John, but why don't you show me that chart?
It is down. So it's down about 1.7% from the week before. So in this situation, we're actually seeing on the macro level, pending is falling a little bit faster than supply. But I think once we get to the actual mechanics of what's happening, we're going to see the opposite situation.
Exactly. And it is August. We can now say that it is August. And I mean, September usually is the slowest month. You know, July, August, September just goes down. September's really the slow, even though it's a turnaround month, that is the slowest month generally for deal volume. So we'll keep an eye on that trend. And let's just go to the weeklies here on the UrbanDigs dashboard. This is Brooklyn, mind you. Taking a look at supply, 185 things. That's down a lot. Johnny, show me that chart.
That is down a lot. That's roughly 26% from the week before. And I think you hit the nail on the head with August. And I think that's exactly what's summing up that supply number there.
Yeah, so buyers out there, you're just not seeing the stuff come on. Let's take a look at demand. Demand's falling, not at the same pace. 192 things came on into contract this last week. Johnny, show me that chart.
Yeah, 192. So you're right. It's falling a little bit. It's almost 8% down, but we're still, and it is below 200 for Brooklyn, which is sort of the magic number. But it's dang close. No, 192 units. That is still a strong week, any measure of the way.
Yeah, exactly. I mean, if we think about where we're coming from on a month-to-month basis, yes, we are down. But if you think about where we are now versus historically, we're just still very, very strong. So we're coming down, but we're historically strong. It's a weird thing to look at. And when I look at the 1 month here, I just want to point out, you know, I'm seeing the net deficit again. I'm seeing 825 things go off the market in contract. Almost 500 things go off the market in general. That's about 1,300 things. I'm only seeing 983 things come on the market. So then that's that net deficit thing that we're seeing right now. And buyers are just, you know, they may have less urgency against them, but at the expense of less supply. So that's kind of the trigger that's going on here, Johnny.
Yep, you're exactly right.
Very good, John. Now let's go to the outside chart of UrbanDigs for the day. We are going to take a look at Brooklyn. We're going to take a look at measuring the cost to buy and own co-op or condo versus measuring the cost of rental, and then break that down by studios, 1 bedrooms, 2 bedrooms, 3 bedrooms, like we did for Manhattan. And, you know, again, here's what this chart looks like. Okay, you're only looking at 3 things here. You're looking at, you know, the dotted line is your median rent. This is studios. And then the red line is going to be your Brooklyn co-op buy. And then the yellow line is going to be your Brooklyn condo buy. And we're just looking at the carrying costs. So we're looking at like a typical person that puts down their mortgage and what that rate is with the median CCs and all that kind of stuff. And we're just taking the averages. This could get tricky in terms of, you know, methodology. Whenever you're doing this type of analysis, there's always different ways to do it. So we're taking everything in a very, very clean kind of way. It's not perfect, but it's an interesting view. And this is what,
and we're not trying to extrapolate, you know, what one's going to be worth in the future, what the opportunity cost of, you know, renting versus buying is. But what we're just trying to do is just see, you know, on a value perspective, looking at the spread between these things, where's the value right now?
Exactly. And when you look at studios and 1 bedrooms, John, take a look at what's going on over here. Let me just change my color so I don't mesh. Right over here, you could see that the Brooklyn co-ops, the studios, Brooklyn co-ops, you can kind of buy something and potentially make money on that in the rental. Whereas if you're buying a condo, there's that gap that you see right over here. So that's exactly what you're looking for, John. And it becomes more apparent. Let's just go to 1 bedrooms for a second. Okay. Because we all know that the smaller apartments, John, didn't do as well over this recovery as the larger units, right? Because people were going for larger space. So here's the 1 bedrooms. And again, you're seeing kind of like that value right over there. I mean, values one way of saying it. I guess you could say it's underperforming is another way of saying it, right? But then when you get to 2 bedrooms, and that's where everything becomes clear. Johnny.
Right. Yeah, so and I think that's what we're seeing in the numbers as well. Is when you look at that, the Brooklyn going its gangbusters pace, a lot of it is in sort of the larger units, like the 1 bedroom, 2 bedrooms, even the 3 bedroom plus, and you're starting to see that value really disappear. But
Right.
you're absolutely right. No, that when you look at the studios and one bedrooms, it's interesting to see that, especially for the co-op level, the rental price sort of hovering right around that same level.
Yeah, and that was the purpose of doing this exercise, is to maybe show what areas might have some relative value where the rental rates are kind of doing their thing, but the purchase rates are doing their own thing independently. And this is the purpose of doing all this, right? Of course, if you localize into a certain sector, you're going to find disparate results, and it's going to always be very, very local. But this is just a broad mix. Thank you, John Walker, for bringing up all these statistics. I really appreciate it. I am Noah Rosenblatt. We are both from UrbanDigs. If you guys got questions, we got answers, please don't forget to visit our forum. Other than that, this has been your Brooklyn Weekly Market Update, and we'll catch you next time.